Bitcoin forecast, let's go. 6K was your last downside. Are you sticking to that?
So first support is 12 to 13,000. I think in the near term, we're going to see a little bit of a bounce, then a wave down to 12 to 13. And then I do worry that you're going sub 10 to 8, maybe even worst case scenario, 3,500. 3,500, very small percentage, but that would be the equivalent of Amazon.com's collapse in the .com era if it were to equal that.
Star trader and crypto enthusiast Gareth Soloway reveals why Bitcoin could go into free fall. He also says what assets you should put your money into in this turbulent market conditions. So make sure to watch till the end to get the best tips for your investments.
So a lot of this has to do with the dollar, right? So when you see the dollar continuing to stay at 20+ year highs and it continues to grind up, it just kills all risk assets. And you can actually watch on an intraday basis how every uptick in the dollar, you'll see the opposite occurring in the Bitcoin chart or in the stock charts of the S&P as well. So a lot has to do with the dollar. We have to keep an eye on rates. Remember, as interest rates rise, there are going to be a certain amount of investors that say, hey, listen, I could get kind of a risk-free return of 5% or 4%. Why am I risking my money in Bitcoin or in the stock market when I could lose 20 or 30%? So there's this give and take going on in the market as the market tries to gauge what the heck the Federal Reserve is going to do in this coming meeting. Are they going to raise 75? Is it going to be 50? Is it going to be 100? And again, the market is just trying to figure out the levels. Yeah, so I think gold has been doing amazingly well. Number one, if any investor out there was fully in gold, they would be thrilled this year, right? I mean, they would be so happy to only be down 5% or so on the year. And the other thing to remember is the gold chart is only down 5, give or take, a percent, but the dollar has gone up 15% on the year. So if someone told me that the dollar was going to rise 15%, I would say, oh, well, gold probably should be down 15% on the year at least. And the fact is, it's only down 5%, which shows to me it's relatively outperforming what it should be doing. And it tells me to also that you likely are having smart money accumulating, which is why it's not down as much. So I continue to be a huge bull on gold. I think, again, you know, people love to hate on gold, but in reality, it's performed well. I mean, take a look at the euro chart, the gold euro chart, or the gold yen chart. It's an awesome, if you were in those assets via those currencies, you'd be loving gold even more this year. But I think, again, the fact that gold is holding up as well as it is with such a strong dollar is a testament that it's getting ready for a big bull run.
Please remember to like and subscribe and hit the notification bell to be notified when we bring out a new video.
So that's such a great one to look at. And again, you know, we had this major, ridiculously hawkish comments from Jackson Hole, from Jerome Powell just a few weeks ago. And still we've seen these hawkish comments that were kind of, you could argue that they were more hawkish than any comments we had ever heard from the Federal Reserve. We know it spooked the stock market. The stock market declined dramatically. And when I say they're calling the bluff, is that the bond market is made up of the smartest money in the world, right? It's the biggest market. It's the smartest money. And what you can see on this chart of the 10-year yield is that the 10-year is just back to where it was in June. And so what that tells you is that the bond market says, hey, listen, we don't think the Fed is any more hawkish than they were in June at these levels, even in spite of Jerome Powell's ridiculously hawkish commentary just at the Jackson Hole meeting here. So again, for me, that's telling me something. The bond market doesn't believe the Federal Reserve is going to hike rates that much more. I think, again, 75 basis points is probably what you're going to get on Wednesday. And then I think the Fed very possibly could be on hold after that. For the last year plus, I've been really a proponent of regulation. And the reason I am is that as much as we like the deregulation and kind of this independent currency type thing, if you ever expect big money to come in, and I'm talking about pension funds with trillions of dollars, I mean, just them putting 1% of their assets in Bitcoin would be massively positive for the price of Bitcoin. So I'm coming from the investor standpoint where I want to see the price go up. And the only way you're going to get that is if you get a framework of regulation and people actually know the rules, right? So one of the things in the stock market that I've learned over the years of trading is that the market doesn't necessarily care if it's a positive or a negative. negative. They just don't like not knowing, right? They don't like that ability to not figure out what the rules are. So by getting regulation out there, you create a framework where these institutions can say, okay, now we can play in this field. We can play ball because we know the rules and we feel comfortable investing with our fiduciary responsibility other people's money. So I welcome regulation. I think it's needed. You saw over the last 6 months bankruptcies and shady activities and all this, and investors honestly are scared of crypto in many situations. So I think you have to get this regulation. There's too many jobs that have been layered on the crypto side of things with the blockchain and everything else. And there's too many big investors even involved in Bitcoin already, where I just do not see that happening. So I think if anything, it's kind of a scare tactic. They're trying to push people to think, oh my goodness, this could happen. And then when they do introduce some stringent regulations, it won't seem so bad. So again, for me, it's a matter of, Biden realizes, and by the way, there's a lot of politicians out there that do invest in Bitcoin and they're big fans of it. These are the politicians that know that they're running up the debt. They know the future of the dollar, and they're big fans of Bitcoin and cryptocurrency. So they're not going to be looking to ban it. And I think you're going to see that the regulation, whether it's a positive or a neutral or a negative, it's still going to allow for the existence of crypto, just with some rules to follow. This is where we're getting into a little trickier market action too. So in terms of the chart, Solana's still holding its $26 low down here. So that's still okay. It looks like it's kind of creating some sort of base right now. So you want to see it hold 26. If it holds 26, I think you could easily trade back up as high as $60. But I do caution that for us to get up to $60, we need to see a Fed pivot, and we need to see the dollar start to pull back. So, I mean, that really is the ruling factor. And then long-term Solana, just keep in mind that it's new technology. You have to always be a little careful that something newer and better doesn't supplant it. And I think that's just the one concern. So for me, just to be clear, when I'm looking at what I'm holding long-term in terms of crypto, I'm mainly focusing on Bitcoin with a little bit of Ethereum, but I'm still not willing to commit long-term holds to Solana, Avalanche, and some of these others yet. So Cardano, I already have a bunch of lines on my chart. You can see this upsloping trend line, so we are holding this support right now. You could argue that you have a little bit of a wedge pattern. Now, wedge patterns, what they tell you, and I'm erasing all the lines except the wedge pattern. Wedge patterns are basically triangles, and price usually stays inside of this until it breaks one way or the other. Whichever way it breaks, that's going to be a big move. That's expected on a technical basis to be a big move. So if it starts to break down, I think at least you test the lows of around 38 cents. If it can break above 50 cents here, then you have upside to maybe 65 to 70 cents there. So again, very interesting to note here. Nice little wedge pattern, but as a trader, you would be on a holding pattern. You would just kind of stay put until you get a break one way or the other. Yeah, so I do think there are some interesting, one stock that I've been kind of perplexed that we haven't got a better bounce on is GSK, GlaxoSmithKline. Pays a beautiful dividend here. And again, you can see how oversold it is to the downside, coming right into support. But bottom line is, guys, beautiful sell-off to the downside. I think this one is, in this market environment, this is one of the safer plays. It pays an awesome dividend, and it's already discounted. Pharmaceuticals, even in a recession, people still need their life-saving drugs. I think this is a definite one to keep an eye on.
Thanks for watching this video till the end. If you are still with us, then don't forget to subscribe to our channel and hit the bell icon to be notified when a new video comes out.